It's a wrap. Oh, wait a minute. We're kicking it off. Yep.
131, episode 131, Pete.
We got a few. And Jared running the screens for us. I mean, you know, we got a lot going on here. And we got stuff going on behind the scenes, too. Hey.
Speaking of behind the scenes, I got the Kraken behind me, Pete.
The Kraken?
The Kraken!
Oh, God. Great.
I don't know. Just seemed like something I should add to the studio.
Yeah, why not? God.
Welcome to the Rebel's Edge, everybody. We will cover macro for 1 minute. We'll have the fantastic futures, some of the top business stories of the day, and how we think it affects more than just 10 minutes of trading. We'll even cover a little sports in here. And for those of you who are subscribers, well, you will get unusual activity. And if you'd like to be a subscriber, go to marketrebellion.com/get started. But let's get started with the show, Pete.
Yeah.
Let's kick it off with the macro minute, which today is really all about what went on over the weekend that bleeds right into our next topic, fantastic futures, because basically OPEC Plus decided, you know what? We think it's a good idea to cut production and cause you guys to pay a lot more for crude oil.
Well, John, it is a good idea on their part. I mean, if I'm those guys, I'm doing the same damn thing, right? I mean, that's the business world. But, you know, we get pretty ticked off about it. And, you know, obviously a lot of what's happened over the last few years as far as energy goes has helped tip the scales to somebody else other than the U.S. There's no doubt about that. I'll just say this, John. How about on March 17th when crude was 66? And then last Friday, we closed a little under 76. And oh, by the way, after what OPEC did, now it's trading 80. I think that's a pretty good trade on their part.
I do too. Speaking of which, Pete, fantastic futures.
We got to have that clip. We got to get a voice that comes in and goes, fantastic futures. That'd be great.
Pete and I were talking about this. We don't have the sound for you folks, but we do have this little clip of us talking about the fantastic futures crude oil May 74 calls, which exploded from Thursday last week when they were $2.30 to over $7 today. Crude oil has run from 67 to now 74 plus. Oh, they can hear it. Great. And inventories were drawn down like crazy for crude oil. So crude oil futures doing pretty well. I thought I'd point out that the May 74 calls, that was the at the money call this morning, they're trading for $2.68 at the Merc, Pete. So rather than, you know, putting a whole bunch of money down for the futures, you could also buy a futures option, and it's probably a smarter way to play. Well, you miss a little, you miss a lot, folks, because if you were somebody like us who actually does trade, and I know many of you do, I know a lot of people on the networks don't, but when you do trade and you have something that basically runs a triple in, you know, between that show and the next show, that's a pretty good day. That's a pretty good month, even a pretty good year for a lot of people. But that was pretty interesting, Pete.
Yeah, that was a great call. I'll just real briefly say this about fantastic futures. We've talked about all the metals. We've talked about gold. We've talked about silver. Gold got over 2,000 a day. Silver, March 8th. Well, it was trading at 20, John. Now it's trading over 24. Just sort of take that in for a moment, because that is a much bigger jump than probably meets the eye from a percentage standpoint. It's been moving, and you and I have seen nothing but SLV calls being bought, tens of thousands almost on a daily basis.
Yep. It's been a wonderful thing. Both SLV, which is silver ETF, folks, GLD, the gold ETF, GDX, which is gold miners. And boy, I think both of us have a lot of those stocks, Pete, that make up those indices, and or we have those indices. So bang.
Bang.
How about this one, Pete? APLS Pharmaceuticals. This is a biopharma focused on ophthalmology, and a stock that in the last 52 weeks has basically been 33 to 76. Today, it trades to a new 52-week high of 77.46. It's still holding on to a 15% gain at mid-session, Pete, on takeover interest.
Yeah, it makes a lot of sense, John. Actually, they've got nearly a dozen drugs that are in different parts of clinical, preclinical, and all the rest going forward. So that's something. Also, a pretty good short interest, which sometimes causes these squeezes to happen at a very fast rate. You hear us talk about it all the time, folks. We bring up, hey, this stock's got a very large short interest. Now, that can work in either direction, depending on whether their calls or puts being bought. But this is a stock that's made a heck of a nice move to the upside. And, John, when you look at it, if somebody can come in here, the balance sheet is great. Cash burn's a little bit tough, but somebody big, and if they actually step in and want to make a move on these guys, which is sort of the word on the street right now, maybe this is a pretty daggone good acquisition for them. Should be interesting.
I think it is something that, like you said, Pete, it's about burn rate when you talk about biotech or biopharma. It's about burn rate to get to that hurdle that lets you sell, not just create something. And then it's about, okay, who is a likely partner and or who is going to take you out because you have what everybody wants, an exciting new drug. All right, how about, Pete, this one, Ascendis, which is not ascendising in, it's descending us. It's down over 30%. Basically, they had a new drug application, an NDA, that was that was deficient. That's what the FDA said. The Food and Drug Administration said it was deficient in one of or more of the issues that's regarding that new drug application. So this one just getting cracked because of that. Would you buy it on a 30% decline?
I don't think that I would just yet, John, although they are talking about the deficiencies of what they're saying, just like you pointed out. And I think that's really important because it's not like this was, hey, stop, this thing's not going anywhere. It's more of, hey, look, we need to talk. They want to talk with the FDA. They want to figure things out and see if they can get it in the right direction. But that takes time. And I know many folks that are out there, I mean, even investors, time is always something that's very, very difficult to deal with. So I think you'd have to have incredible patience if that's what you want. They do have plenty of different drugs, John, that are in different phases right now. So that's good too. So they've got a bit of a pipeline, and that I think is something that could be a strength. But the cash burn, again, right now the problem is their cash burn is high. They do have a decent balance sheet, but unfortunately they've got to get something across, and they haven't gotten there at this point yet. And that's, I think, going to be the challenge.
Yeah, this is something that, you know, because of this deficiency or deficiencies that they have in this filing, Pete, it has traded all the way back down from a 107 close to being as low today as 64. That's nearly at the 52-week low, not quite. Bounced a little bit above that, but man, you need to get back on track if you're these guys. And if you're in the stock, you know, I think it might be a hold at best.
Yeah.
All right. What about WWE, Pete? We talked about this one back in January because we saw unusual upside call buying in January. Now it turns out that Endeavor, the group that owns the UFC, Ultimate Fighting Challenge, is going to team up with them. They're calling it a takeover. It seems more like a merger, but I guess they're going to take out the WWE at about 106 a share. It's going to list under the symbol TKO, which I think we all kind of get the humor in that, technical knockout. But would you take a step in this one since it's nowhere near 106 today, Pete?
Yeah, and it's down 5% on the announcement, John. So it's a little bit puzzling because it seems like something that can get done, most likely will get done. So I would probably try something. I wouldn't do the stock though, just in case I'd be wrong. I'd rather have options in place where I could say, you know what, here's an opportunity to put on some form of a spread to the upside where I can put something in there. And at worst case, I know exactly what I'm going to lose. So I think from that perspective, I'd be a little bit more cautious for sure. The interesting thing is both companies, John, have had great growth. Both of them, obviously, live sports. That's where it's at. That's where the money is. That's where the omni-channel and folks that are going international, that are on there live and all the rest of it. That's the exciting spot, I think, to be. So this could be something that could really be an amazing company put together, where I think if their growth continues, both of them growing revenue about 10 or 20%, John, it's a pretty amazing thing to see what's going on. And unfortunately, right now, I think McMahon, actually, fortunately, I should say, I think he's getting out at a pretty reasonable time as well, because as we get further and further from the pandemic, I think that we will start to see a little bit of that kind of settling back down a little bit, probably back closer to normal than what we've been lately, which has been a very, very strong move to the upside.
One part that you nail is the idea that live sports are where it's at. Everything else, you can watch it at your leisure. And granted, you can, if you have a DVR or anything else that causes you to be able to watch something at 9 o'clock at night, at 2 in the morning, at whatever. Yeah, people watch when they want to, except if it's live sports. Now, UFC is live and you can bet on it. I don't know quite about the WWE, if you'll find too many people that'll let you place a bet on that, but it sure is entertaining. And I think that's where, Shane McMahon's a friend of ours, folks, full disclosure. I sent him a text this morning when I saw that he did this deal, or his dad did. By the way, Pete, did you see that Shane made his big comeback and this ties right in. Shane made his comeback at WrestleMania, and then Snoop Dogg had to go in for Shane. You can't make this stuff up. When I say entertaining, I'm talking about Snoop Dogg in the wrestling ring, with some of these crazies like Jake Paul and all these others. I mean, it is the best. But again, I don't know that they'll let you put money on those. So that one isn't the live action one quite as much as the draw of the UFC is. But I think they're both pretty strong with the fans. People that love them just love them.
Crazy as it sounds, John, crazy as it sounds, they've actually talked about betting on wrestling. It's been kicked around, and I don't know how in hell that happens. But anyway, let's go on to the next one. Let's get to tech resources.
Let's do tech. So, Pete, TECK, folks, not TECH. Tech Resources rejects an offer from, and that's a Canadian-based company. They're rejecting an offer from Glencore that would have created a nearly $100 billion natural resources giant. Now, Pete, does this mean that if we wait a little bit, we might get an increased bid by Glencore, and this is just the first pass since Tech rejected their first pass?
I would absolutely say yes to that, John. I mean, I think that the reality is that we're looking at Tech. Tech's sitting there. I think this literally was, as you said, hostile. I mean, they had no idea this was coming out of left field. All of a sudden, there's this bid. This is a stock that's not too far off its 52-week highs right now, but they are in the sweet spot, and Glencore knows it. Glencore wants to make that move, and they're actually going to try to, if they can, try to persuade at least the shareholders, John, because it doesn't look like the C-suite wants it, but the shareholders might. And so in late April, there's going to be a vote going on, and with that vote, maybe they'll have Glencore sit in there, maybe kind of kicking around the idea of, hey, look, 23 billion was the starting point. Maybe we'll give you a little bit more than that, and maybe here's what we'll do. Maybe they can actually get the shareholders to say, this seems like a pretty good deal. So I don't think this is over yet, and I think this at least extends out the next 2, 3, 4 weeks of April, because I think it's very late April where this meeting gets together, where they're going to do this vote.
Yeah, and I think they basically had to accelerate it, Pete, because Tech was going to spin out their steel making and so forth. Yeah. They were going to spin that out. And so in order to keep it before they do that, they wanted to bid for the whole thing and make it a big splash. Yeah. 17% is pretty big. I bet it's a lot closer to 25% if they get this deal done, Pete. Mm-hmm. And I don't mean another 25% from here. I mean from where this was a week ago. But I think overall, when you look at Tech, people are thinking, well, CLF, which is Cleveland Cliffs, just announced another $100 per rolled ton of steel price increase. They just moved it to $1,200, Pete, per rolled steel. Now they went to $1,300. I think that they're looking at this saying, wow, prices are going up. We want in on this. And I would think this one gets a higher bid. So upside call buying, watch for it in this one.
John, I thought there was no inflation, though. I thought everything was going down. I mean, crude oil. Wait a minute. The steel, silver. Wait a minute. Well, these guys. Wait a minute. We aren't out of this just yet. I'll just say that.
No, we are not. So we're going to keep our eye on when the Fed makes its next move, Pete, too, because if they have to cut, watch this thing run. Not just the market potentially run, but watch prices go like this. Because right now, the increases they're seeing from the Fed are sort of crimping people's ability to buy more. And that's one of the reasons they're doing it. Yeah. All right. What do you got as far as sport clips, Pete?
Well, it's why I flipped my hat around, John. Now we're going over to the sports side of things, so I'm going forward with this. How about the Final Four? Now, there's two different things going on right now when we talk about the Final Four. The women, which is now done, and then, of course, the men tonight. So I thought it would be interesting to hit this, John. How about this? The women, when it comes to ratings, are up 66% year over year at 4.5 million on the average. I mean, it's amazing number. And then when you look at and break it down, it was the Iowa game against South Carolina, 5.5 million viewers for that one. That's a big number, man. I mean, that's up 72%. So the women have certainly attracted a great viewing audience. It's been phenomenal. I think it started to slip a little bit yesterday with LSU, though, because LSU definitely had them pretty good, John. 102-85 was the final there. And by the way, I think last week we even mentioned this, but LSU was not a bad team. This is a team that lost just a couple of games. One of them was Tennessee. Another one was with a great South Carolina team. So it's not like they were shabby in any stretch, and they absolutely put it to Iowa yesterday and Caitlin and the gang. And I thought, you know what? It was a great Final Four for the ladies. How about for the men? It started off great, John, because everybody, of course, wants David versus Goliath. Well, the problem is after you get a bunch of Davids in there, everybody's kind of wondering, well, where in the hell we need a Goliath? We want the old school teams. We want Duke. We want this. The men's ratings started up here and have dropped like you have never seen before. I mean, it's been absolutely amazing watching how that's, kind of developed, John, because everybody liked the idea until they didn't. And now that's a lot less, the excitement level is certainly something that's pressuring people right now. But I'll tell you what, we've got UConn, we got San Diego State, we got our old guy from Minnesota, John, Jim Dutcher's son. He's doing a great job. Brian Dutcher of San Diego State, fun team to watch. They had that amazing shot with almost no time on the clock. Didn't take the time out. The guy just drains it. It's awesome. They get to go to the very top of the dance. But UConn, John, I'll tell you what. Tell me this. Who do you think will win? And here's why. I'll set you up and see if you get convinced. So UConn, they're 30-8. Pretty good season. They beat Iona by 24. They beat St. Mary's by 15, Arkansas by 23, Gonzaga by 28, Miami by 13. Nobody's been close to these guys yet. I mean, they've blown everybody out. You look over at San Diego State, they were able to get by this team, get by that team, get by this team. But I'll tell you, is UConn just destined just to maybe put a hurting on them like LSU did last night to Iowa?
Well, yes, is the answer, because you laid it out perfectly, Pete. You beat Miami. You beat Gonzaga. I mean, these are two of the top programs, not just, a one-time team that's really good. Miami has become that in the Southeast, and obviously Gonzaga in the Northwest, just a tremendous power. It's kind of like Gonzaga and Butler jumped on the scene a decade ago, not because they just jumped on the scene, but they jumped up to the Elite Eight and then Final Four kind of level. And the fact that you've got those kinds of victories, double-digit victories over all those teams, tells me that they're probably going to hold on and hold off, unfortunately, for Mr. Dutcher, San Diego State. So that's where my money would be, Pete. But I'm also happy that the women are seeing this kind of surge in popularity, because we always talk about it, folks. And Pete's got a daughter. I've got 2 daughters. So I obviously want to see women do as well as they possibly can. But there's always been a reason why they don't get paid as much for these either college or professional sports. And it's viewing. It's the amount of viewers you attract for the advertisers. Well, if you can get 5.5 million people watching, or 4 million for the championship, that's enough of a number that you're going to see the price, the bidding go up for women's basketball NCAA, which, you know, means more money for those teams. I know that's not a pro sport. It's not like, oh, the Liberty versus, you know, the Magic in women's basketball or whatever, pro basketball that's sub NBA. I mean, this is going to put more money into these programs at the college level, and that's great. And we both root for that. So this is what has to happen. You're never going to see women make the same money for soccer that men make unless women can draw the same numbers that men draw. And the same is true with this in NCAA basketball.
Yeah. Yeah, I agree with you, John, and I think it's pretty exciting. I'm excited for the gals, and I'll tell you what, I watched quite a bit of the women basketball. I thought it was pretty. It got more exciting than the men's, that's for sure. I mean, it really did, because the men's, after that first round or two, and we lost all of those, you know, Goliaths, that became a bit of an issue. And you know, no Alabama, no Houston, no anybody,
no Purdue,
no Purdue, and that happened in round 1. Yuck. All right, Major League Baseball, John. Here's the one guy that I've not given flack to. Now, you've heard me go after these commissioners of different sports, right? The NFL, it's pathetic. He may only makes $50 million a year, but, you know, who's counting? And then you go over to some of the other sports. Adam Silver, absolutely pathetic in the NBA, letting these guys sit out games and the fans get screwed. So Rob Manfred, what does he do? He actually steps up to the plate and says, you know what? We've tested it. We're going to do it. It's on. You can complain as much as you want, but we got a pitch clock. And that pitch clock is going to shorten games. It's going to make games more exciting. It's going to change the game to some degree, but that's okay. We're willing to do that because we want the younger fans. And so far, here's what I've got for you, John. And I give him an A+ on this, by the way. So here it is. First 35 games. Average game, 2 hours and 31 minutes. That's 30 minutes shorter than where they were last year. So you're losing a half hour. They've also got batters. They're hitting with a higher percentage now because these pitchers can't walk around the mound just chewing on their, you know, their red man or whatever. And the batters can't sit there and stretch back, check out their gloves, scratch, you know, where, and do their thing either. So that's another issue. But stolen bases even, John, that's another one. And the success with stolen bases. So the success rate's gone from 74% to 87%. That's a really big jump. That's really impressive. And it makes the game a little bit more interesting, right? Because guys are hitting the ball better. Guys are able to steal bases with a higher success rate. I think when you look at some of these things, they're pretty great. By the way, Mets in Miami yesterday, 2 hours and 9 minutes. I mean, it's amazing how much they've been able to cut out because they've got the daggone clock, right? It's made the sport a heck of a lot more watchable, I think, to a lot of people. So I'll ask you, does it make you actually maybe consider at least going to a – because I know, like, you and I don't go to many baseball games. We talked about buying a major league team or a minor league team one time. But what do you think? I mean, would you go to a game now that it's actually kind of, 2 hours?
Yeah, I definitely would, Pete. And I'm sure I'll go to a Cubs and or Sox game when I'm back in Chicago a little bit. But I would say that it's going to really do a lot for ratings on TV too. Because like you said, you know, when it's 3 hours and 20 minutes or whatever, that's just it's too long. Just like a Quentin Tarantino movie, if he can't edit it, you know, it's a great movie, but you got to do Kill Bill 1 and Kill Bill 2. You can't just put it out there because people, you know, they need to get up and walk around. But I think that you'll see ratings improve. I think fan support of these teams will improve. Baseball used to be America's sport. We all know it's football now. It ain't baseball anymore. But this will help baseball make a comeback, I think.
Yep. Rob Manfred, you get an A+ from us. And actually, I do know him a little bit, John. I used to fly around once in a while with those guys. So I know a little bit about baseball for a guy who doesn't actually watch much baseball. Great move.
Well, folks, I'm going to be on with Charles Payne in a little over an hour at 2:30 Eastern time today. Charles Payne's on the Fox Business Channel, Making Money with Charles Payne. I'll give you a couple picks for those of you who are always saying, well, where's Unusual Activity? Well, you got to be a subscriber to Market Rebellion to get that. Or you can tune in with Charles Payne because I'll do a couple bits of Unusual Activity with Mr. Payne, 2:30 Eastern time today. Thank you for joining us. We'll see you tomorrow, 1 p.m. Eastern time. Bam.